Hi guys, how are you? I was just thinking about how hard you've been working on all your models and businesses and getting prepared for lecture this week, and I realized it would be good to give you a heads up of what this lecture is based on. I know that we have the exam coming up in a few weeks, and I want to make sure that this week we can really work on the right stuff. So I put together a couple of pictures from the book and wanted to go over this with you. So here it is. So this chapter is going to be on cost variance. And this chapter is really, for me, it's chapter 14. And it's called Sales, Direct Cost Variance, and the Role of Non-Financial Performance Management. I'm on page 567 in my book. This chapter is really based on this chart right here. And it's how to find different cost variances and digging down to figure out where the variance comes from. Now, one thing, it could come from just units sold. So that's just the quantity variance. Could be sales price. That's just the market, the way it's reacting. Could be the sales mix of different products. It could be production costs. It could be coming from materials or from overhead or from labor. And it could be coming from selling in general and administrative expenses. So it really varies where it can come from. Now this is an example of why we're doing all of this and where it's headed. This is showing us how you ever get your gas electricity bill and you see every month is like completely different prices. So this shows us why this bill is different from last month. So it's showing us weather. It was 20 degrees colder. So that caused $85 change in the total bill. Number of billing days in the period. Okay, so it was one more billing date, so that's quantity of days. That cost us $1.11 of usage. Now there was a rate change in usage per unit. So that was a rate change, and now it's $28.92 more because of that. And customer controlled use, so that we used more gas, so we kept the heat longer, or we used the stove more. And there was an actual budget to actual adjustment that also occurred. So this is what we're doing in this chapter. We're figuring out how to look at different drivers of cost to come up with the total variance. Now here we see that, for example, there's a standard price for something. Now we're talking about labor here. And then there's labor hours. So for example, in our flexible budget here, with 3,900 hours at $40 an hour. Now, actual hours worked was 35.10, still at $40 an hour. So the first variance is based on the difference in hours worked. Then the second variance is based on the actual price paid for those hours. So that now the labor went from 40 to 42, and that's a difference that's based on price. So we have quantity and price differences here. And you could see the first one we called efficiency variance, and the second one is a rate variance. Similar understanding here with we're going from a flexible budget in materials used from budgeted material used, 3,120 pounds, to actual materials used, which is 3,630 pounds. And then we see the price change because now it's actually 26 instead of 25. So we see there's a usage variance. We actually used more pounds. And then there's a price variance, which is like actually it went up in price on us. So the first one is usage. The second one is price. And we could see the two variances. And finally, guys, this is the chart at the end of the chapter. Check it out in Exhibit 1415 in mine, where we see all the breakdowns of the variances. Because we start off with the total master budget variance, and then we break it down to sales volume variance, which is just based on sales. We're breaking it down into the flexible budget variance, which is based on our three different variances: the selling price, the variable cost, and the fixed cost variance. And then you could see the rest. I will be drawing this whole chart up on the board on our classes Monday, Wednesday, for the different classes. And I encourage you to read this in the book, to focus on this chart, and I'm going to go over this on the board. This is what the homework is about. This is what the exam will be about. So I hope that you have a great rest of the weekend, and I will be seeing you this week. See you soon.